Hello everyone and welcome back to Behind the Report. I'm your host Ismail Imran Mazin and today we'll be discussing a significant tax case that has attracted considerable attention in Malaysian tax and business community, which is Malaysia vs Watson Personal Care Store Holding Limited 2023. To help us explore this case from different perspectives, we have four distinguished guests joining us today. Okay, the first question is for you, Mr. Iman. Could you briefly explain the background of Malaysia vs Watson? Specifically, who were the parties involved, what transaction gave rise to the dispute, and what circumstance ultimately lead to the tax assessment and legal challenge? Plus, could you also explain the role played by the IRB throughout this case, from the audit stage to the court proceeding?
The case involved a multinational group where a Malaysian company paid a payment to its related company in Hong Kong, mainly transferred as national fee or service charge. The Inland Revenue of Malaysia (IRDA) questioned this payment because they believe the service might not fully justify the amount charged. As a result, the tax dispute arose where the company claimed these expenses as deductible, but RRBM disallowed part of them and issued an additional tax assessment. RRBM role is to enforce Malaysian tax law and ensure the company report their income and expenses correctly. RRBM reviewed the taxation to check whether the payment were genuine business expenses and comply with the transfer pricing rules. After the review, RRBM concluded the part of expenses were not fully justifiable for a tax deductible purpose and therefore adjusted the company taxable income by issuing an additional assessment.
Okay, the next question is for you, Mr. Adik. What were the main tax issue dispute between Watson and IRB? Why were these particular issues so important from a taxation perspective?
The main issue in Watson's case was whether payment made by Watson Malaysia to a related company in Hong Kong were subject to withholding tax. IRBM argued that the payment were derived from Malaysia because the service benefit Watson's Malaysian operation, while Watson argued that the service were performed outside Malaysia. Another issue was the substance over from principle, where IRBM focused on the actual economic benefit received in Malaysia rather than location where the service were performed.
I also like to hear your view on why this issue becomes significant from a tax audit and compliance standpoint, where any warning sign or compliance concern that may have triggered closer scrutiny by the tax authority.
Okay, this issue are significant because cross-border payment between related parties can be used to reduce taxable income in Malaysia. Therefore, IRBM closely audits such transactions to ensure compliance with withholding tax and transfer pricing rules and to prevent profit shifting.
Mr. Iman, could we discuss the taxpayer perspective? What argument did Watson present in challenging the assessment faced by IRBM?
We argued the payment for legitimate business expenses incurred fully and exclusively for business purpose, as we are own management service with this group and should be deductible. We also claimed that the charge were on a commercial basis in line with the arm's length principle, consistent with normal multinational group practice. In addition, we contended that sufficient supporting evidence of the service was provided and that the expenses had benefited the company's operation, so the RRBM adjustment was not justified.
Next, from IRBM perspective, what were the key arguments used to defend the assessment and justify its position?
On the other hand, the RRBM position was based on the economic substance of the transaction and the concept of income derivation. The RRBM argued that although the service was carried out in Hong Kong, the actual use, implementation, and commercial benefit of the service occurred in Malaysia, where they supported Watson's retail operation and contribute in the generation of local revenue. Since the management expertise, recommendation, and operational system were utilized within the Malaysian business, the RRBM mentioned that the income was effectively derived from Malaysia. Consequently, the payment fell within the scope of Malaysian withholding tax provision, making the tax assessment imposed by the RRBM valid and enforceable under the relevant provision of the Income Tax Act 1967.
Next, looking at both sides objectively, which part do you think had the stronger argument? I appreciate the assessment together with the reason behind your conclusion, Mr. Harry.
In my opinion, Watson had the stronger argument in this case. This is because Watson provided transfer pricing documentation to support that the interest rate charge was conducted at arm's length. On the other hand, IRBM argued that the loan agreement was not commercially realistic because the principal amount had not been repaid. However, the court found that IRBM did not provide sufficient evidence for transfer pricing analysis to support its adjustment.
Okay, Mr. Harid, could you explain the court final decision in this case and the outcome for both parties?
The legal principles applied by the court was the arm's length principle under Section 140E of the Income Tax Act 1967. The court emphasized that transfer pricing adjustment must be supported by objective evidence and proper analysis.
More importantly, what legal principle did the court rely upon in reaching its judgment?
The court therefore ruled in favor of Watson and dismissed IRBM's appeal.
And taking a broader perspective, do you believe that the court decision was consistent with the objective of Malaysian tax law, particularly in balancing tax collection, fairness, and legal certainty for taxpayers?
In my view, the court's decision was consistent with the objective of Malaysian tax law because it promotes fairness, transparency, and accountability. At the same time, it protects taxpayers from arbitrary assessment while ensuring that tax authorities exercise their powers based on sufficient evidence. Therefore, the Watson case highlights the importance of proper documentation and evidence in transfer pricing disputes.
Okay, Mr. Adi, this question for you. From an audit and enforcement perspective, what lessons can tax authority and taxpayer learn from this case?
Okay, this case threatens IRBM audit approach by emphasizing substance over form. Tax auditors will look beyond contracts and examine the actual purpose and economic effect of the transaction.
Okay, next, how might this decision influence future tax audit and investigation, especially those involving related party transaction and cross-border payment?
The case set a precedent for strict investigation of multinational companies. IRBM is likely to focus more on related party transaction, transfer pricing compliance, economic substance, and withholding tax obligation.
For business listening today, how important are proper documentation and record keeping during a tax audit? What type of record should company prioritize to support their tax position?
Documentation is crucial because taxpayer must prove that the service was genuinely provided and that payments are justified. Documents such as service agreement, invoice, and transfer pricing report help support the taxpayer position and reduce the risk of penalties during an audit.
Okay, let's now shift our focus to compliance and ethics. Okay, Mr. Firdaus, what practical compliance strategy would you recommend for taxpayers who want to minimize the risk of dispute with IRBM?
So first, companies should prepare comprehensive TPD or transfer pricing documentation in accordance with Section 1408 of the ITA 1967, which include functional analysis, economic analysis, and benchmarking studies to support the arm's length nature of related party transactions. And in addition, there should remain proper record as required under Section 82 of the ITA, which include agreements, financial records, and supporting evidence. So, the taxpayers can demonstrate that their tax are commercially justified and can endure any inspection during audit.
Beyond technical compliance, how do professional ethics and good tax governance contribute to maintaining compliance with Malaysian tax legislation?
Compliance and ethics go hand in hand. Under the laws of professional ethics, MIA, tax professionals are expected to uphold integrity, objectivity, and professional competence. This means being honest in tax reporting by making decisions based on facts rather than personal interest. And lastly, ensuring that tax advice is supported by current laws and regulations. So, the Watson case is a good example because the company was able to demonstrate the commercial substance of its transaction through proper documentation and governance processes rather than relying on legal form.
And on the other hand, what are the potential consequences when taxpayers fail to comply with tax law and regulation, both from a legal perspective and from an ethical or reputational standpoint?
The consequences can be significant. For example, taxpayer may face penalties under Section 113 of the ITA 1967 for submitting incorrect returns, while more serious cases involving tax evasion may fall under Section 114, which carry a heavier penalties. Most importantly, taxes related to funding public services such as healthcare, education, and national infrastructure. When taxpayers fail to comply, the company may be affected. That's why tax compliance is not only a legal obligation, but also a social and ethical responsibility.
Okay, Sir Firdaus, last from me. Based on the lesson we learned from Malaysia versus Watson, what practical steps should business take to strengthen their tax compliance framework and reduce the likelihood of future dispute? If possible, please support your recommendation with real-world example or situation that business may commonly encounter.
For example, if a company receives financing from a related party, it should prepare a benchmarking study and maintain supporting agreements to demonstrate that the interest rate complies with the arm's length principle. It was one of the key factors that helped Watson successfully defend his position in court. Also, company should also conduct regular tax reviews and establish strong internal tax governance policies. It will reduce tax risk and also strengthen stakeholder confidence in the organization. Finally, the Watson case reminds us that businesses can combine proper documentation with ethical tax practices. So they will achieve long-term compliance and maintain public trust.
That concludes today's discussion. A big thank you to all our guests for sharing your valuable insight, and thank you to our listener. See you in the next episode.